What's your sense of the stability of the American banking system?
Well, it's actually at this point a global banking system problem.
It is.
So the we have a situation here where it's not that the canary in the coal mine has died, but the miners are starting to die too. So Silicon Valley Bank collapsing overnight is one hell of a big canary. It's more like a turkey. I mean, it's not like some small fry thing. I think that there is a serious danger with the global banking system. There's a strong argument that if you were to actually mark to market the portfolios of the banks, the loans and whatnot, that the entire banking industry would have negative equity.
It feels that way.
Yes. So if you look at, say, commercial real estate, like offices and whatnot, the whole work from home thing has substantially reduced office usage in cities around the world. I think San Francisco is at 40% off. And San Francisco is like an extreme example, but I think it's on 40% vacancy. Even New York has. I think almost all cities at this point have record vacancies in commercial real estate. So now the commercial real estate used to be something that was a grade A asset. That if a bank had commercial real estate holdings, those would be considered the highest security, some of the safest, assets you could have. Now that is not the case anymore. One company after another is canceling their leases or not renewing their leases, or if they go bankrupt, there's nothing for the bank who owns that real estate to go after because they're previously strong company, now dead. What do you go after at that point? So we really haven't seen the commercial real estate shoe drop. That's more like an anvil, not a shoe. So the stuff we've seen thus far actually hasn't even. It's only slightly real estate portfolio degradation, but that will become a very serious thing later this year, in my view. I think if we see, which we're likely to see, a drop in house prices because the interest rates are too high, and for most people, when buying a house, they look at the monthly payment.
Of course.
If you're a 30-year mortgage, the vast majority of it is interest. So if the Fed rate is high, you have a high base interest rate. Effectively, the price you can pay for the house drops because you now have to pay more interest, which means that if you've got a fixed monthly payment, you can now afford to buy a house for less money. It effectively drops the prices of houses.
Yes.
This is the kind of thing that tends to accelerate, so that then you can get negative equity in the home market as well. And so if banks end up having loan losses in both their commercial and, well, they're definitely going to have loan losses in their commercial portfolio, but also in their mortgage portfolio, this is a dire situation. There is a solution to mitigate the magnitude of the damage here, which is for the Fed to lower the rate. But they raised the rate again. Now, if I recall correctly, which important caveat, I think the last time the Fed raised rates going into a recession was 1929.
What happened next?
Yeah, the Great Depression.
The concern, I'm not telling you nothing you don't know, but the concern is if the Fed drops rates again, then inflation will accelerate, and you can't do that in an election year.
So inflation is going to happen no matter what.
Huh.
If you increase the money supply, you get inflation.
Right. So
there's not some magical cure for getting rid of inflation, except to increase the productivity, the output of goods and services. So if you say like what is money? You've got these sort of it's basically numbers in a database that sum up to some total. Then you've got the output of goods and services of the economy, and as long as the ratio of money to ratio of goods and services stays, if that stays constant, you have no inflation. If you add more money, if you add money to the system faster than you increase goods and services,
right,
then you have inflation. So all of these COVID sort of stimulus bills were not paid for. They just generated more currency, more money was created because the federal government, the checks always pass, unless you hit a debt limit, which there's probably going to be some debt limit crisis later this year. But provided you haven't hit the debt limit, the federal government, unlike state governments or city governments or individuals, can simply issue more money, and that's what they did. I mean, as the old saying goes, that there's no free lunch. So if you could just issue massive amounts of money without negative consequences, why don't we just take that to the limit, make everyone a trillionaire? They tried that in Venezuela. How'd that work out?
Well, they had to eat zoo animals.
Right. It's not good. There's no free lunch. There's not some ability to issue money and not have inflation.